Hello, 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 everyone. Happy Thursday afternoon. How's everyone doing? Mike Arnold here, co-founder, Pat Trading Partners, along with the soon-to-be on, the one and only Bob Iacchino. Hello, Connor. Good afternoon, Patrick. Hey, Sashi. Hey, Daniel. Hello, 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 AP's World. Hello, George. Josh. Sterling. GPS, nice gap up on earnings. Wish I'd seen the daily, weekly double bottom last week. I actually had not looked at gap either. Anybody have applied materials? Nas Industries. Jacob. Welcome, everyone. So, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Thank you. Thank you. Thank you. Let's just, hey, Paul. More and more new people showing up all the time. Let's just bring Bob on. Because you know what? We got 800 million in options expiration going on tomorrow. So we got to get right to it. Where is the Bob button? There is the Bob button.
What's up, guys?
How you doing, Bob?
Got some water down the wrong pipe.
That is a very pink water bottle. That's
It's magenta.
pink.
That's magenta.
You're right. It's magenta. I stand corrected.
You have magenta lines on your chart since I've known you. So
They're pink.
finally, you admit it.
Do I actually have magenta? Hold on. I gotta. Which?
Always
I don't have any lines on my chart. Look.
Well, that's incorrect.
Which are the magenta ones? Hold on.
You used to always have magenta.
I used to always.
Yup.
Are we going with the always statement?
Well, no, because that's a Coco statement. You often, majority of the time, had it.
Oh boy. So how is everything going with you, Bob?
Good. Everything's good. Tired.
Tired. Well, the week's almost over. We just got to get through OPEX tomorrow, and then it's another weekend. At least it's not snowing in Florida.
No, it is not snowing in Florida. It's actually very pleasant, like 76 degrees.
Well,
I've got to run to the grocery store after this, and I'll probably put the top down.
that's very nice. So what? I mean, let's see. What we've had a lot of Fed speak today. Did you notice I
Yeah.
did not say speaky?
Then now you just said it. Okay.
So I got to cover that with you. Minor stuff. Kansas Fed, both in contraction on composite manufacturing. Not sure you need to talk about that. Yeah, I'm more interested in the everything that was said today. We got Fed's Collins speaking tomorrow morning. And then it's the Consumer Board leading index and existing home sales. Not much going on there. Pretty mixed market this afternoon. Apple sort of leading the snapback. Utilities taking it in the shorts in terms of sectors. But a lot was negative this afternoon besides technology and consumer defensive. Fed watch still at 80% for the 50 basis point versus 20% for the 75. Still in fear and greed. What was that?
It's actually down from yesterday. Yesterday was 85. Today
Yes.
it's 80.
And now it's 80.
Yeah.
We're hovering within this, 75,
Yeah.
80
Yeah. I'm with you.
area. I think that 50 is baked in from even with a little more bullish on the hikes. And we had Palo Alto and Applied Materials and Gap and Williams Sonoma after the markets. We'll see if we can peek in on that after, Bob. So first off, back to the importance of having you here before we get to questions. Give us a take on the Fed.
So Bullard was interesting. Bullard obviously has been a very influential member of the Fed for the last 24 months, mostly because he's been right. Not because he has more influence than he ever had before, but he's been right. He's predicted things, and those things have come to pass. So that gave him a little bit more credibility. And he lost the credibility with the 7% number. So for those of you that don't know, a couple of very specific things that Bullard said. One of them said, in order for rates to be sufficiently restrictive for the Fed to reach its 2% target, the Fed would have to go a lot more than it's currently gone. And, excuse me, he said that rates have to get around 5%. And now this part I'm paraphrasing, with a worst case scenario being closer to 7% for the terminal rate. Now, knowing that Bullard is using the Taylor rule to point out the 7%, seems to me like he thinks it's possible that inflation a year from now could still be at around 5%. Because the Taylor rule is 2% higher on the Fed funds rate in order to curb inflation than inflation is currently at. He also said that even under a generous analysis of monetary policy, the Fed needs to continue raising rates by at least another full percentage point. So that would mean that if they do 50 in the next meeting, then they likely will do 50 in the Fed meeting, or 25 and 25. I would still vote for 25 and 25 on that. If Bullard were right on the low end of his predictions. So there's a couple of things in the data that kind of jumped out at me with this. Everybody focused on the Philly Fed and how weak it was. I mean, not everybody focused on Philly Fed, but when they focused on Philly Fed, they focused on how weak it was. But prices paid and prices received were not as weak. Okay, that's probably part of the reason that it was so much lower. You look at Philly prices paid, 35.3 versus 36.3. That's not horribly weak. All right. New orders was down, but not nearly as much of a difference in new orders as you saw from the headline Philly Fed. And also, CapEx index was up 2%, not 2%, 2 points, because these are not percentages. So the business conditions was a little bit better. So while the headline Philly Fed number was not good at all, there was some underlying stuff in Philly Fed that was still kind of pointing to inflation. So there's that. Retail sales were higher. Not yesterday. I think it was the week before.
Yesterday was retail sales.
Yeah, but when we talked about retail sales, I don't remember when it was. I said that I thought Macy's would kind of continue the trend where Macy's would do poorly and Kohl's would do better. Well, the opposite happened. Macy's did better and Kohl did poorly. So I went into the numbers in more detail, and what I saw was Macy's held inventories a lot lower than most other retail establishments over the last quarter. Macy's still high end. Walmart benefited quite a bit from their food business, from people going in and buying groceries. Target wasn't able to do that because their food is more expensive and their regular goods are more expensive. Target also had this big hit from retail theft. Not all of that's shoplifting, by the way. Probably somewhere in the range of 32, 33% of it is shoplifting. The rest is employee theft, fraud, things like that. Kohl's, on the other hand, Kohl's, at least last quarter, took all the inventory they can get. TJ Maxx managed it a little bit better and got picky. Now, then you looked at the retail sales number, and the retail sales number was better than expected, but certainly not blowout. It was not a blowout retail sales number. And we still had elevated inflation data. So in other words, if you look at Home Depot having better revenue, but less foot traffic, that could be in the retail sales figure as well, because it's not inflation adjusted. Home Depot had higher inflation, in part due to theft, by the way. In part due to theft. Home Depot raised prices on power tools that they fitted with this technology that does not allow them to work if they're stolen. So I don't take a whole lot of the retail sales number and say stuff is running back up. But it doesn't matter if I do, it matters if the Fed does. So from that perspective, I think we have a situation where people are still thinking they know what the Fed is going to do, and the Fed is still trying to come out there and saying and say, you guys don't really understand what we're saying here. Now, we had another Fed speaker today. I believe it wasn't Collins. Might have been Cook. I don't remember. We had another Fed speaker today that said it would likely be appropriate to start slowing the pace of rate hikes. Keep in mind that that doesn't mean no rate hikes at all. And I think that's what Bullard was kind of trying to say. So that's my view on like all of it encapsulated.
All right. Okay. So my whole nutshell take was that 50's done, yet don't get overexcited that, we're going higher and we're going to pause for what we've been saying. But hey, just because we're going to 50 doesn't mean we're stopping or adjusting our pause perspective.
Hey, last I looked, the first rate cut was still priced in for November. I think that probably has to go away.
Yeah, but
I think that probably needs to work itself out because they just keep trying to tell us that, don't be surprised at how long we leave it here. So, Anyway.
We had a question earlier. Hold on, let me just say good afternoon, Royal Palms. George asked, Bob, you and Cameron Dawson do not see any correlation with how low the yield curve goes in the depth of a recession, but could you all be overlooking something?
Well, I think sometimes, and Mike can correct me if I'm wrong, a lot of correlation analysis is just observation. There's not really anything to miss. I mean, if you want to get into details of what those correlations are, there's obviously calculations. But going all the way back to some of the deepest and longest inversions, we had very quick recessions. So no, there's no correlation between the depth of the yield curve move. And if you think about it logically, okay, it makes sense that that wouldn't be a direct factor because what drives 10-year notes versus what drives 2-year notes can be multitudes of different things. It's not even a perfect recession indicator. It's not. It's like 9 of 11 or something like that. So yeah, there's no correlation that I found in terms of the length and the depth. The one thing I will point you to is Mike's research on when stocks rally after an inversion. There's compelling evidence, I think.
Connor wants to know, where do you guys watch the Fed Speaks at? Some of them are broadcast, some of them aren't, and they're different locations. You just have to essentially search for it.
Yeah, I get headlines off of Twitter usually.
And you can get summaries at the end. It's not like I don't watch every one of them if there's something going to be really important. But, I'll get summary briefs and everything else and go through them. It's not like I have all the time to sit and focus on, especially they're talking every couple hours at this point.
I know, it's ridiculous.
What are you doing today? Fed speak.
That's the Fed that decided to get out of the business of forward guidance. And then they talk 4 times a day.
Yeah. It's absurd. Oh, wow. I didn't even look at the end of the day with the, it's the Elon inverted yield curve, -69. There we go.
Since we get 420, that'll be the Elon one.
Now, when it starts accelerating back to 420, yeah, that's when you have to watch for the big stock sell-off. So people can understand the impact of these rates at 3.5% to 4% Fed funds rates today translates into new car auto loan rates around 6.5%. Fed funds rate around 6%. Expect around 8.5% plus.
That's good information.
Daniel, Bob, what do you think about the idea that after COVID lockdowns, people bought high expensive items like cars and new stoves? So the inflation drop is lack of need of high cost goods.
Well, inflation is not measured off the price of the good. It's measured off the change in the price of the good. So if a $110,000 Porsche goes down to $100,000, that's a 10% decline, right? It's not It doesn't work that way. Expensive things aren't what drives inflation. It's the change in price of all things. So that wouldn't really be the case. Let me know if that makes sense to you. It doesn't matter. The amount of things doesn't matter. I'm sorry, the price of the original price of things only matters in relation to what the new price is to calculate inflation.
Do you guys think that this type of volatility in the markets could be a signal that the markets could be making a big move in December?
Well, I mean, generally, I'm not even going to say this. A big move has to, theoretically, would be relative, right? So if we are currently in the midst of large moves, to consider it a large move building up to a large move, it had to be a really large move, right? Generally, I've seen volatility expansion preceded by volatility compression. Mike, I don't know if you agree with that, but like I wouldn't say that current volatility means there's necessarily more volatility coming.
I don't think it's going to be quiet. I mean, you generally go through compression leads to expansion, and expansion continues till it doesn't, and then we have mean reversion. But we could go through this whole bear market cycle, especially with the way options are right now, and the short-term options have taken over the option market, which naturally leads to much higher volatility, even due to hedging that has to happen. Short options are very difficult to hedge because you're constantly adjusting your hedges, and the volume of short options. It's one of the things that I don't think that was taken into account with all these short duration strikes were put in place, that all right, when they've become this gamified, the just the necessity of hedging off from a dealer and market maker perspective leads to increased volatility due to the rapid turnover and changing of the book size, duration of the book, and key delta and gamma levels. So
Right.
it's brutal. The term structure of the markets becomes so short that the volatility has increased as a byproduct of that. So I don't think some of this volatility is going away anytime soon. You also remember, in pullback markets and longer duration bear markets, the dealers and market makers spend more time in negative gamma. Negative gamma amplifies moves both up and down. When you have a run-of-the-mill bull market, there's very little time spent in negative gamma. And so it's in positive gamma, which then deadens the moves and deadens volatility. We're just in that. I mean, I think it was since this bear market or since, let's just not call it the bear market now, because I'm not going by the 20% off, but since the downside volatility started back, we'll give it a January of 22, I think it's been in negative gamma over 80% of the time. So if you think about that, 80% of the trading days have been spent in an environment that is naturally increases volatility. There. So I hope that I explained that okay. It's a sort of a difficult thing. I mean, people are like, well, what does it matter? Yeah, well, it matters because, again, in higher volatility environments, it's why we do stuff on price action, because of putting in stops and targets that naturally expand or contract with volatility helps you to manage your positions better. It's why we use price action instead of like, oh, let's just use a 5-point stop or a 10-point stop or a $5 stop, which doesn't account for volatility expansion or contraction. Hey, vertical dimension. Screw the blue check mark when you're going to have a blue circle with a white star. Exactly, Amit. Bob, question for Bob. Bob, can excess puts calls in the VIX affect how high It could have gone in June and October.
I'll turn that over to Mike.
Can access puts and calls? Well, look at you're going to have to look at the net effect, the strike prices, and the gamma and resulting delta from that. Yeah, it excess of anything can lead because of gamma and hedging to over and undershooting levels. But this is why it's getting so complex. I mean, I look at stuff, even people that follow delta and gamma, like try to piece together all the delta and gamma from the dealers and large houses to try to figure out. Like tomorrow, 4,000 in the S&P is the key level by far, and it's end of it's mid November. A monthly 800 million expiring. Yet even intra week, it's been so volatile because you have these 2 day expirations with stuff that it's insane. And people have seen the put call ratios; they're through the roof. So modern platforms are fee commission farms. The more you trade, the more they make. That is how they are structured. Hey, Gary. A huge portion of retail traders and social media gurus are day trading ultra short term options like 5 days expiration. It is
What's a
crazy.
guru?
I don't know what the FURU stands for.
Sterling, what's a furu?
I should know. Uh, I don't. It's yeah. There's. I mean, there's stuff with these 2 days expiration now. Oh boy, and everything's become. Oh well, I gotta juice everything. It's literally this micro option trading, and you thought day trading just with a futures or a stock was bad. This micro option trading has gone insane. I'm waiting. Once that gets blown out of the water, then we'll be closer to a bottom. Also,
Yeah, it's funny
uh,
when you talk about that kind of stuff because it's like what's going on with crypto right now, where you've got people who are talking about they've lost entire fortunes because there's no adult in the room. It's funny because a lot of young people with this FTX debacle, and now we've got problems with Genesis. A lot of people in crypto are finding out what markets can do, not necessarily what they will do or should do, but what markets can do. And they can continue to go down whether you want them to or not, whether the security, the asset, the technology you believe in, whether your reason for believing in it or not is accurate. These things can go down a lot. That'll happen in the short-term option market too. A bunch of people will lose money. It'll blow up. The furus, which I'm now going to use, will have already collected a lot of money. And it's just going to be regular people holding the bag. It just happens time and time again because people want something for nothing. And there are no free lunches. There are only trade-offs. That's it. So when you're making money quickly, you're taking more risk than, I don't want to say more risk than you should, taking more risk than you probably understand you are.
yeah. So, any more thoughts? Have you been following the FTX stuff with?
Yeah, I have. I have.
Oh
Um,
boy.
yeah, I mean, honestly, if you didn't look at that guy and think there was a problem, and again, I don't, I'm sitting here talking to you guys with tattoos and a t-shirt, right? But this guy would be up on stage with, I don't, maybe I shouldn't say this stuff. Like just looking at this guy, I'm like, the guy doesn't even know where to get a haircut. And I don't think he needs to have short hair, but it's like you're doing commercials with two different socks that haven't been washed. It doesn't really fit that he was going to be some sort of super um, company running genius. Like maybe he's a tech genius, but it's interesting. A lot of the times, founders of companies are not the ones who should be running them, and they remain that. They continue to run them. And I mean, just looking at his financial documents in an Excel spreadsheet, like the only way that anyone outside of SBF looked at that and thought it was okay is because they were either A, didn't care and they were aware of their theft, or B, they're just there's no adult in the room. There's no comprehension that leverage has another side to it.
And also, when there are no audits,
Yeah.
legitimate audits, I'm talking by, and there's even a lot of games that get played with the big four, but at least you have some semblance of an audit with all this garbage that's float around with attestations, moving money around, blah blah blah.
Mhm.
And then, oh yeah, we wrote all our financials on the back of a napkin. It's a complete, and you know what, it actually, is there ever going to be any fallout with the SEC with this, and meeting with him, and like we have no regulators anymore.
Well, yeah, I mean, we have no regulators in the regulated markets. This
I
market, it's still
know.
not even clear who's supposed to regulate this.
Yeah,
So
but
what's the enforcement going to be if nobody even really knows if they're supposed to be regulating it?
you had Gary meeting with him like, oh yeah. I mean, it's all complete. Are we ever going to get regulators back in, or is it just going to take a? How big a blow up is it going to take?
A Lehman style blow up. And look, I mean, somebody put in there, who is it? It's John A. Do you think Coinbase and Binance will get hit just like FTX? I have to say yes, but I have no knowledge as to why that would be. Because you just, in that industry, you can't believe anything. It's hard enough to believe stuff in the real world. I mean, one of the reporters from Bloomberg asked me why Bitcoin isn't crapping out if this is such a big deal. And I said, because there's a lot of people that think the elimination of bad actors is a good thing. And they think that once a bad actor is eliminated, there are no more. But we continue to see more and more of them. I was listening to a chat from Saylor yesterday, Michael Saylor, and he was cheering this on. He's like, just yeah, keep getting rid of these guys, keep doing it. I don't care how low the price goes, I'm not selling it. It's not what he's in it for. He could end up being wrong, and he even said, he goes, if I'm wrong, then I'll be near broke. He goes, but that's how confident I am that I'm not wrong about. He even said 100 years from now it'll be the only money there is. Well, I mean, I hope it comes back before that.
Well, it's also, you shouldn't put all your eggs in one basket either. I
Yeah,
don't care. Like the people who I'm putting everything I own into gold. Well, that can also have a downside. You gotta
yeah.
manage. You gotta manage risk. Period. Bob, if durable goods misses next week, is that bullish or bearish catalyst for the markets?
It'll be bullish for the equity markets of durable goods misses. It'll be interesting to see CapEx and Philly Fed up and durable goods missing. It would be bullish for the equity markets. You got to think of it now that bad economic data pulls the Fed back. Good economic data ramps the Fed up. Now, that's not the fact, but that's the way you have to think about it.
All
Gary
right.
the golfer's not wrong.
Where? Yeah, it is worse than Enron. Well, just the structure and the number of players and the structure, and at least Enron tried to legally put things into place. I mean, it was a complete fraud at some aspect, but they put legal structures into place. This is just a disaster.
Yeah, it's like a 5-year-old.
Yeah, it's like kindergartners, and that's why I don't think this is nowhere from over, because as I said even before, there's too many cockroaches scurrying around. And
Yeah,
there's too much crap. This attracted too many players who either intentionally or unintentionally did not know or do not know what they're doing, and did not know how to manage anything with the scope of money that was being tossed around.
right.
I've seen corner side craps games that are run better than this. I mean, bookies have better books than this. So it's just a disaster. Any other thoughts you have on anything?
No, I'm
No.
good. I'm tired. Yeah,
Oh,
I went through my sort of bigger picture right when you turned on the Bob button, and now I'm ready for any questions. But it looks like we're done with the questions.
looks like we're done with questions. All right. Well, then I'll let you go.
All right, guys.
Have a fantastic rest of your day and weekend, and we will talk to you next week.
You too, Mikey. See you
All
later,
right.
guys.
See ya. Hey, all right. How is everyone doing? We still got people here? Little pullback. Let's just get into the markets. I can't stick around. Did anybody get the applied materials results? Back up. This is I'll see if there's any questions. Bob's gone now, but I'll see if there's anything. Here's why you always watch closing basis. Closing basis. Look at this. Just the instructional moment. Big spike up closing. If you just ignore the wicks, look what you have. Look at this. Still sideways correction. Little pop up, little pop down, closing back in a sideways consolidation. And look where it's closing in relation to CPI Thursday. Back above. So, is there anything interesting today? Was there anything interesting? Gonna show a couple things. Let me just jump to the Russell. God, this is why you use, not though, again, I hate when it hits exactly, but it hit exactly pretty much for the bottom. I'll go through the other, but this is a little valid double for the Russell. So watch for a close above 1845.30 at least on a 1 hour basis for that, for a potential recovery move. I'm using conservative targets. Even though this is the move that started it with this duration of flat area, this fits nicely in there. And I have done testing with that, a fair amount of testing, and that does warrant using conservative targets. S&P, just a couple shorter term things. We had that little mini double on the open, okay, that I talked about just before I dropped off, hitting up there, coming back down, and this translated into a sloppy bigger double, with this being one side, this being the other side. And the targets up there came up to here, 39.57. What I was watching this afternoon, put on the retracement harmonics, pull back. Here was the breakout area, and from the other bigger double, and between the 50 and 62.5, little spike bottom. This for me was a percent B entry, but you could use a rotation entry. You could use whatever bounce pattern you want for a little run back up. Just wanted to show you, I was watching between the 50 and the 62.5 with that really nice pullback area. So, and remember I talked about, just to recap some things, we had this advanced clear path on the 1 hour. We dropped to the 15-minute to identify the little key areas. I pointed out this morning, little key area, little key area. Key area coming right up there. If I drop down, you can see here to the candle bodies. Besides using that other double target, bam, bam. Pullback, bam. That's how you use the shorter time frame to help fine-tune key levels in a clear path move. You can do a lot just from price action. Key level, if you're looking then to get in a bigger picture, we're right back to the breakdown area on the 4 hour, 39.62. We're coming down here to that 50% harmonic, back to the second target from the first target from the bottoming pattern. So above 30, I'm really paying attention on a rally above 39.62 for that 4K area tomorrow. Not only because of OPEX, but you also look at the consolidation in there between last Friday, Sunday night, Monday, Tuesday, Wednesday, Today we broke down, but snapping back up to that area. As I pointed out on the daily, you got the dip down, you got the dip up, and it's so far a 1, 2, 3, 4, 5 day. Virtually, yeah, the little dip reconnected it with the rotation zone, but overall it's a sideways consolidation. That's why if you look at your line chart, look at this. Your line chart, boop, 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 boop. It's not gone anywhere on a closing basis. It's stayed in its, I mean, it's gone a little up and down, but it not net is just a little sideways area. All right. So the key area now that was reinforced today, this, what was the exact low? 39.12. You now got a really short-term line in the sand. Why do I say that? You get below here and get accelerated momentum, more so than the bottom of the rotation zone, which I will pay attention to now based off of this key high coming in the rotation zone. If we were to break to below today's low, that would be my intermediate point. Then the next point I'm watching is this rising channel line for any major pullbacks. Short term, I'm still keying off around 4,000 tomorrow. That could be refined based off of overnight price action. And then if that holds up, still going to retap with the 200 simple moving average. Yeah, I saw some of that chain, Daniel. All the tie-in with everything. It's interesting. Oh, it wears me out. Mike, do you think you could make a video for subscribers on how you trade momentum with options? Yeah, I can consider that for the subscribers. I mean, I'll go through what strikes and why I focus on them. So, let's see. S&P going to test that bottom of that channel. In what time frame, George? Hey, Michael Anthony. What time frame, George? All right. Where else do we sit? NASDAQ, virtually the same thing. Coming back down, I put up this from the sloppy head and shoulders. Just wanted to leave it on. We put up these targets this morning. That's why you should tune in to all the live streams, or at least watch them on replay. First and the second target was hit and got a little bounce off of there. Let me remove these levels. So at this point, I got to ratchet down. I could leave this up one there. I'm just going to put up another little level about 11,561. These are the levels I'm watching overnight, 11,632 being primary. And the little breakout area I'm keying off of is, man, that, no, right there. Right there. 11,750. And then 11,800, and then you got a little mini clear path. But there's lots of stopping points, remember, up here. So you've got a lot of things. Then it's 11,900, then 12,000. So there's just not a bigger clear path up here. So for any longs going in tomorrow, it's aggressively raise up stops. Dow, again, sideways correction, little dip in the rotation zone and rotation back up. Still no close on an up candle above the 62.5. Oh, this is getting tiring. If bullish for tomorrow is about 34,100. We already looked at the Russell. Notes, inside bar today. So a little pullback in the notes, but nothing's changed with the pattern, letting the rotation zone catch up. Dollar index tried to get the breakout and then closing back down into a sideways consolidation. I'm now focusing first on the retest of this 200 area before possibly putting in another bottoming pattern. VIX, The old VIX trying to roll over going into OPEX Friday. Rolling over, well, there's a fair amount of puts getting closed today. If you're wondering why, with the market sort of down, volatility was down because puts were getting closed. Crude finally getting back. So I was watching between 87.5 and 100. Finally, we got there. I'm ratcheting this down now. Why? Because this is another close on the bigger term, 62.5. So now I'm watching for the retest of this low area. There's no other great signals just now. But by the way, this is where pay attention to closes. Because the low close before, I'm not talking about the way back in September, but the low close in the middle of October after this pullback was 82.07. Today's close 81.85, so it could not hold this on a closing basis. So on a closing basis, this is the lowest it's been since back on the 3rd of October. Very interesting. Looking at just key price action. Again, Bitcoin is just sitting there in a beautiful triangle formation. Not much to talk about there. Tesla. Yes, you do have a double bottom now. There is. Does that mean it's bullish? Not yet. It has nowhere near getting triggered. Just one. This does qualify now. Still watching for this pullback to the 87.5. What? Oh, GPS. Who Sterling mentioned that, and I had not looked at this. You know, there's and look, yep, that was definitely one I missed. Wow. Yeah, that is legitimate. I wouldn't be chasing it higher here though, based off cycles. But this could be another. This could give multiple opportunities to get back in. All right. Within a week. Okay, so by next Thursday, Thanksgiving. I thought you were You're now bearish, George? And you thought I was happy because I was bearish. I was happy because we got some finally decent price action with some patterns. It's a lot easier to trade when you have patterns. Trading without patterns, from my perspective, stinks. I just want to see something here. Okay, so we had the little run up, pause, harmonic, pullback. Come on. What did I do? All right. Is there a potential 1 hour double bottom on an RTY? Yep. It would be just like on the futures I went through before. Let's see. Does it measure out? I know it measured out on the futures. 18.13.30, 18.13.50. Yes, it does. You notice how we measure it out. We don't just guess. Why? Because I at least want to be accurate. Same thing as I talked about before. Why am I using the conservative targets? Because even though this is the move that's reversing, this is a long enough pausing area. This target fits within it very nicely. This target is right at the breakdown zone. So there's your potential Russell 2000 setup for the bullish case. I know nothing about Algonquin Power Utilities Corporation, Michael. Why is it at the lows? Oh, what is that, Pete? I'd have to look into this more. P to E 322. I'd have to look into this a lot more. I could not answer your question without doing. I mean, they missed on beat on revenue, missed on EPS. I'd have to really tear into this from a fundamental point of view to know what's going on. From a pure technical point of view, oof, that's going to be ugly just from the technicals. Something's not right. So I don't know. If anybody else has any info, this is not something I touch. Mike, do you eventually see NVIDIA eventually making its way back down to the 108 area long term? Yes, I do. Yes, I do. I will tell you, I actually see NVIDIA, even from a fundamental and technical perspective, I'd be more closer to the $70 mark. Okay, for my longer term. It is still insanely overvalued. This PE is going to come in drastically. Whereas, NVIDIA, why isn't it the PE showing up? I don't know why the PE, but it's got a PE around 55. No, that's going to come. You're going to see this PE easily probably back to 20 before it bottoms. So long term, again, I like a couple other semis. If you're looking to play semis, I like a couple other way better than NVIDIA. This thing's priced for beyond perfection. And I didn't think their earnings report was that good, but you have still people trying to buy this. So this would not be my long-term, but this would not be something I'd trade around a core position at all in. I wouldn't even be trying to buy it up here besides a short-term, very short-term like swing trade. You have a great night, Amit. What time frame would you look at the potential double top setting up in TSM? Taiwan. I would look at it. Let's just see the. I'd be looking 4 hour close for a trigger. Remember, I'm looking at TSM to come back down substantially over the next while. But this is something if you are looking to play or potentially build a core position in, you can play trades on the way down. This would not be where I'd do a ton of accumulation, but it could be played. Just double checking the SMH. All right. Thanks for that. I have to look more also. Thanks for the numbers, Daniel, with AQN. I'd have to look more so what they're doing as a business too, because something is not right there. Do I see? Yes, I still see possibility of Dow new lows, Dow in the future. I think that's going to be now that's the big breakdown one. It's consolidated again, as I said. This is remind me of when stuff went into the Dow in 2001. You know, Nasdaq rotation out of tech again into safer stuff, into some more blue chips. Stop with the you know, the highfalutin ones and go into safer stuff. When this breaks down again, it's gonna get uglier. But yes, I see the Dow going back down still also. Remember, the Dow's only 30 stocks. And when you got money rotating in, it can stay up a lot longer, and they're generally considered safer stocks. All right, what was I didn't let's see. Applied Materials. So they beat. Just trading up slightly. They're at a pretty key resistance. What is? I have not looked at that. It's not bad. This could be another interesting longer term play. Applied Materials. All right, with that, Gary's betting on the Santa rally and get defensive first of the year. I think there could be a rug pull in December. I'll have to trade the patterns. You got too many people saying, "Oh, I'll rotate stuff out." I get so many people. After January 2nd, January 3rd, we'll start playing it more defensively, but it's guaranteed through the end of the year rally. I've heard guaranteed through end of the year rally so much at this point, it's gotten ridiculous. So I'm watching, but I need a pattern to trade. Long term, it's still bearish, the patterns. So, from my perspective, if you're counting on the Santa rally, I would know where your stops are on your positions from the bullish perspective. I would not just go to sleep and try to wake up January 2nd and then take action in case we do have something happen. Is it time to buy Alto? Would I do it here? I need some kind of. I'd at least want it to get above $4 again. With a stop, you got a great stop area if you're trying to play this from the long side. Because your stop area is this 200 on the weekly. You get a close back below there, you got a clear path all the way back down. So if you're trying to bottom pick this thing, let's just see where the short term pullback level is. See, I bet you it's gonna. I'd have to put. We could see more retracement, even though it's got a low PDE. This is not something. Let's see. I think this is going to have more downside, but if you're looking to play something, you keep this a tight stop just below these recent lows. The problem is you do have this is let's see here. Let's just see. See, I don't think that's going to work, but let me measure it out. I mean, you want the. I'd wait till it triggered. That technically does work. It technically does work. It's very sloppy, but there's your there's your bullish play, and then I could even use a tighter stop. I'd just wait till it triggers if it was, because if that doesn't trigger, your front run pattern would be above $4 to try to front run a thing there. I would not just go buy it here. Personally, again, I can't give you individual trading advice. So that's about all you have. But January 2nd is your birthday. Well, happy, very early birthday to start. All right, there you have it. Everybody buy stocks on the 2nd because it's Daniel's birthday of January. It does look. I don't know. Again, this could be possibly played to the upside, but longer term, here's the other thing. Not only has it closed below 62.5, it's barely holding this 200. Once this 200 breaks, you could accelerate it to the downside to at least $1.62. So that's why I would not just be a buyer here without a key signal. ON, I haven't looked at that in a while. What? Hmm. Uh, you got to close above today's high. It's an aggressive play for a retest of a break above today's high with a rolled into as long as it closes. You got a gap fill play. It would be a rotation zone and a percent B buy. Challenge is it's probably trading pretty close to fair value. I'd be looking, if I was going to do something for ON Semiconductors, I'd wait for another oversold condition. It's trading pretty close to fair value without looking more in depth at the fundamentals. They look pretty good, but not like you're getting a value on it. So from a short-term trade position, it would just be this little pop back into key major resistance. So I'd have to aggressively trail a stop. I'd be rather buying this if it triggered an entry much lower. Not much lower, but back down. I'd rather see an entry back down, somewhere between 61 and 57. No, this is not a double top, by the way. I'd be trying to grab a cheaper entry with a tighter stop personally. I was late, cost my dad a tax deduction. Don't count on making anyone money. I bought PED, which oil. I'm just reading. Ross Stores looks like it has some more upside to go. It closes above 62 and a half. Toast. I put in tossed. All right, I'm running. I'm really running. It's been a long day. You got this. You're talking about this little mini 62 and a half, not the 62 and a half here. Oops. The 62 and a half here. Yeah, I mean, I'd be wary of that 200 in the way. I would be very wary, but that could easily tackle. That could easily tackle the 200 on the weekly again. Holding, I mean, just with your basic analysis. You have prior resistance becoming support, looking to try to break this out the upside, close above the 62.5 multiple times. Yeah, you just could easily. I would definitely use the flat 200 where it topped out as a stop, key stop level. If you're trying to target 105.27, do not ignore about 102.75 to 103 as a significant stop raise. Hey, JH Park, thank you for the super sticker. You are welcome. Thank you for, I hope you're a subscriber to the channel and stick around, JH. You're welcome, Jacob. You're welcome, Michael Anthony. Everybody's hanging in there. We're going to get negative wind chills by Saturday already. Ugh. Can't stand the cold. Thank you for asking, Daniel. All right. I'm wrapping it up for now. It's getting dark. I got to get my dogs out for their evening walk before it gets too dark and too cold. Thank you, everyone, for tuning in. Be back tomorrow morning for Options Expiration Friday for fine-tuning our levels. Going into the Friday, and hopefully I can call it an earlier day tomorrow, but I will be back to do the live stream after the close. Well, that's fun. We appreciate everything you do on the old Twitter account, Sterling. Thank you. Everybody give Sterling a shout out for everything he does post on Twitter on behalf of Path Trading. Juggling his real job and the Twitter. Thank you. I'll talk to everyone tomorrow. Bye for now.